The future of finance is on chain. It may be time to reevaluate your crypto thesis. Hey guys, it's Keith Allen, and yes, it is happening right now before our eyes. Ethereum and Bitcoin are driving the evolution of the financial system, and things are changing, and they're going to be changing fast, I think. Let's go ahead and fade out of the music. We got a lot to cover today. Oh, my goodness. What a busy day. A lot of news coming out this morning. Of course, we have Fed Chair Powell coming to speak in about an hour from now. I'll be done before that. I promise you that. Of course, a little bit of housekeeping before we dive in. A couple of notes for you. That sale at Material Indicators is happening and it's ending tomorrow, 30% off. Premium Plus, use code MITS30 for 30% off. You get all the tools. Trust me, you want it, especially in this evolving market. You definitely don't want to be without the tools that can help you mitigate some risk and make some money. All right. If you're new to the stream, welcome. My name is Keith Allen. I'm a work from home dad. I'm a full-time trader. I am co-founder of Material Indicators. And I'm glad to have you with me. If you're an OG, thank you so much. I truly appreciate the continued support. Will all of you do me the favor of smashing some buttons? Hit the like, hit the share, invite some of your friends and community members into the stream. Help me grow the channel. It really makes a difference. I do this for free, and that's just a little way you can pay me back. I appreciate that. That would be great. Also, make sure that you hit that subscribe button so you don't miss any of the future streams and data and valuable info that I can share with you on each of these streams, because I do that pretty much daily. All right. So a lot of news to cover, a lot of ground to cover. We will look at Bitcoin and ETH charts, of course, because everybody wants to know what's happening, kind of heading into this end of the month situation, which is typically a volatile situation. But we have some dampening of that volatility based on liquidity in the order book. So I'm going to go ahead and start sharing charts. Then I'm going to climb into all of this news that is, I really think, casting a lot of light on what is coming. I mean, it's been talked about for a while, right? But now that we have this landmark crypto-friendly legislation passing through Congress earlier this month, we really have you could call it a dynamic shift. You could call it a seismic shift. You could call it a foundational shift. The point is, this is not just a market update. This is an absolute wake-up call. You need to pay attention to what's going on, and you may find that you want to reevaluate your strategies based on, or at least your thesis based on what seems to be developing here for us. So real quick, let's take a look at the charts. And also want to remind you that live chat is open. If you want to join me, I'd love having you. Always enjoy engaging with you guys. If you've got questions, I'll do my best to answer them. If you have insights, by all means, please share them. We all appreciate that for sure. So let's go ahead and let's start on the Bitcoin chart. As we can see, we've been having a little bit of a wrestling match here with the 21-day moving average. Here we go. And yesterday we kind of lost it and fought with it. Pretty perfect doji candle through that 21-day moving average. And today, again, fighting for that level. It has been lost at the moment, with price trading around 117.8K. Looks like we got a comment already. Who's here? Hello. Always a pleasure to have you. Appreciate the continued support, my friend. So this isn't groundbreaking. We've been trading in this range here for quite some time, since that nice wick up to the all-time high. Price has really settled back. We closed that day, the day that Bitcoin hit that all-time high of 123.2K. Things closed in that 119, 120 range. And we've been trading in, basically a 117 to 120 range ever since, with the exception of that one wick that took us down to about 114.5K. The way this looks in the order book, we can see that we have this liquidity, kind of a guardrail, if you will, not a huge one, but there is about 20 million down here in this one. I'm going to call it 116. 750, 116,700, 116.75. that has held price since we had that dip, right? We had this big major sell-off here. This was just an extraordinary market dump that we hadn't seen in quite some time. Nice recovery here, but this bid ladder down below, I really thought these guys had a good intention of getting filled, and I think they'd still like to, and there's still a chance that they do before the monthly close. What's going to be interesting is whether or not this is still in position here after the monthly close. Will they, move things up? There's speculation of whether people are just in a holding pattern because of the FOMC meeting today. Nobody really expects a Fed rate cut at this point, even though the president and Powell had a rare meeting last week. I think it was last week when Trump was touring the Fed Reserve renovations and basically ambushed Powell. But based on data from CME, it doesn't look like there's any sentiment whatsoever for a rate cut this month. On the other hand, when we get to, here you go, 97% say not happening. And in September, that dynamic shifts. Yesterday, it was in the 60% range, I think. So even that's changing a bit. So based on maybe some of the new economic data that came out earlier today, we'll be watching to see what happens tomorrow. I think that's going to be more telling as we're looking at challenger job cuts and PCE, jobless claims, et cetera, coming tomorrow. And Friday, of course, the big one with non-farm payrolls and unemployment. Those are metrics that the Fed pays very, very close attention to. So we will too, of course, right? But I think the looming issue here, based on what we've been hearing in the past, and hey, maybe they had a discussion, maybe Powell and Trump had a discussion about it, but tariffs and the looming indecisiveness on tariffs seems to be what is holding the Fed back from making a decision, because they simply cannot forecast if they don't have that data. And so the Trump administration blames Powell. The Powell administration, Powell won't directly say it's Trump's fault, but he has insinuated that, hey, with tariff uncertainty, it's difficult to forecast. We need data. So every time we meet a tariff deadline, the Trump administration kicks the can down the road again. And, well, we expect nothing different to happen when we get to this. I think there's an August 2nd deadline coming up next week. So, be prepared to see that can kick down the road one more time. What's really interesting, we can head over to a chart that we've been looking at quite a bit here in the past month, and that has been, based around all of this sentiment for an alt season. And we had this nice divergence between Bitcoin dominance and total 3 ES, with a decline in stablecoin dominance, and now we have a bit of a reversion happening on that. So this, at least for the moment, and I'm not going to say that all hopium and dreams are done for a potential alt season, but at this moment, it's safe to say that money is not rotating so much into alts in the way that it was. It's rotating back into Bitcoin, and it's rotating into stable coins. Perhaps some profit taking here at the end of the month, and a rebalancing will happen as we head into August. Now let's take a look at what's happening on the ETH chart. ETH obviously has just had an incredible month. What, like 60%, something like that, through the month of July. Huge run for ETH, outpacing Bitcoin and most other assets for that matter, but has recently lost its local trend. The macro trend still very, very healthy here. You can see down here that started back in, I'd say if we take this back to when we had that crash on tariff announcement back in April, it's been a nice trajectory since then. Since April, it has been from that low. It has been a 182% for ETH, which in hindsight, which isn't something you get to trade, certainly has me wishing I had more ETH at the time. And I'm in a position now where I'm looking to add ETH to my position, and I'm about to show you why. Let's take a look at some of the big news that has been happening here recently. Okay, so and I've posted a lot of this on the Black Knox channel, by the way, on X or Twitter or whatever you want to call it this week. So let's scroll back a little bit. We've talked a bit about what Fundstrat's Tom Lee was doing with this new ETH treasury strategy, right? And so the ETH treasury strategy, obviously everybody's familiar with, or at least Bitcoin traders are familiar with the Bitcoin treasury strategy that Michael Saylor made famous. Lots of other companies have followed by adding Bitcoin to their balance sheet to hedge against their falling stock prices and to hedge against the economy. And that has been very successful for Michael Saylor, and many others have followed. And of course, the Trump family is following with their family businesses, and has just added 2 billion in Bitcoin to their balance sheet on Trump media. And of course, the president has talked about adding a Bitcoin reserve to the U.S. reserves. And incidentally, there wasn't mention of that in a recent report that was released, and I think that may have price correcting a little bit, but I think that's just kind of like a work in progress, right? So this was the first shift in ETH adoption that came at scale. Obviously, we've had the ETH ETFs, and the ETH ETFs have been performing very, very well over the past several weeks, especially since Tom Lee made that announcement of starting that ETH treasury strategy to accumulate 5% of all ETH. So we've seen positive inflows for ETH ETFs day after day after day after day for weeks. And no surprise that it is now one of the best performing ETFs of all time, joining Bitcoin in that club, right? So we know there's institutional interest, but what Tom Lee has expressed, and I shared some of this data on my personal page about their strategy and why they're doing it. But the long and short of it is, they are at this stage trying to accumulate as much ETH as they can, because while Bitcoin is considered a store of value and is certainly has the potential, certainly not there yet, but has the potential to become a world reserve currency. ETH is considered the oil of the financial system, right? ETH is going to be what fuels things. ETH is going to be what fuels transactions with banks. It is going to be what fuels smart contracts. It is, major banks and asset managers are no longer on the sidelines at this point. They're actively looking for crypto-backed loans, on-chain settlement, tokenized assets, smart contract infrastructure. All of those things are happening, and the reason we're getting maybe a turbo boost on it now is because of this recent crypto legislation. The Genius Act, for sure, has paved the way for banks, and crypto clarity also, having a more defined and clear regulatory framework is very, very important. And all of these institutions were waiting for that before they put their toes in. Even frickin' Jamie Dimon, who has been the world's biggest critic of Bitcoin, and called it a pet rock, is now not only positioning JP Morgan to offer their own private stablecoin, but they earlier in the month, or maybe even last month, announced that they're going to start to allow their customers to collateralize their IBIT ETFs. Okay, that's the BlackRock ETF. And then today, I read a story that they are now considering. And I said this when it happened. I said this when they said they were gonna let you collateralize the ETF. Well, why collateralize what was considered synthetic Bitcoin when you could collateralize the real Bitcoin? And so now they say they're gonna, they're also looking to allow people to collateralize Bitcoin and ETH. Well, they're not the only ones. There's players coming in, and I have some of these stories posted again today that you can see on X. That 21 Capital is looking at Bitcoin-backed USD loans. The White House is putting out their report today, and they're endorsing integrating DeFi into TradFi. Okay, why is this? Well, it's simple. I think they came to the realization that TradFi legacy banks were going to get crushed by DeFi, right? And so now they're looking at ways to integrate the technology behind DeFi into TradFi. What's going to be interesting, because this is going to take some time. It's going to take some time for this to evolve and get right, but there is going to be some competition in the market. And I would guess that competition is going to be very much shaped around what the loan to value ratio is, and what those interest rates are, and what potential earning possibilities there might be. Part of that Tom Lee strategy is staking. So they're accumulating all of this ETH, and they're going to stake, and they're going to lend, and they're going to have some control over network decisions. So I think that's very, very interesting, and it speaks volumes about what's happening. So, and this was an interesting story about the on-chain data, indicating that fresh capital coming in through ETFs being the biggest driver in the ETH rally. Whereas when we look at this chart, when we look at this divergence chart, it's easy to draw the assumption that capital is rotating, or at least at this point, the capital was rotating from Bitcoin into ETH and alts. But what the on-chain data is saying is there's new capital coming in through ETFs for ETH specifically. Okay, not so much alts, obviously, because only I think Solana has an ETF at this point. But for the most part, this was a rotation out of Bitcoin into alts for this little mini alt rally that we've had. But now we see again that we have a drop off in that alt performance, and an increase in Bitcoin dominance, and an increase in stablecoin dominance. More importantly, indicating that this is just kind of how should I say, not there yet. So if you aped in thinking that, hey, this is alt season, you aped in early. Simple as that. And there's ways to mitigate that risk. I've shared that with you guys many, many times before. Like, here we go. Let's find something interesting. Like with the timescape levels, right? Look at Solana. Solana looked like it was doing great. Started making new highs, and sorry, I have something in my eye. Started making new highs, but didn't make it up, back up to the yearly open. And this was actually first week of the year, but the rejection here from the yearly open, this is pretty much evidence that it's just not time yet. So fighting for support right here at the 21-week moving average. I don't want to get sidetracked on this indicator, but it is one that, by the way, comes bundled in that package if you want to go for the Premium Plus toolkit on material indicators and save yourself 30%. So back to the news here a bit, right? So this is this isn't just a matter of, okay, that's interesting clarity of where the money is coming from or what's driving the rally. This is further validation that ETH is going to be a big driver in this financial system. And we also got an announcement today that and I can't see where it is. I don't know what's going on with the ETH out with the Twitter algo, but the SEC announced, excuse me, the SEC announced today that all of these ETFs, the Bitcoin ETFs, the ETH ETFs, I imagine that would also apply to the Solana ETF and any future crypto-related ETFs, can now be created and redeemed in kind. Now, what does that mean? That means that, I've been a big critic of the ETFs, and that, why would you buy an ETF when you could buy the underlying? And there's reasons, right, that a lot of people have gotten into that via the ETF vehicle because it's something they're comfortable with. It's a reduction in counterparty risk. They're dealing with legacy financial institutions as opposed to, the young and often shady crypto exchanges. I'm not saying they're all shady, but if you've been in this industry for long enough or been trading long enough, you've been bit by counterparty risk at some point in time. Think FTX, think BitThumb, think Cryptopia, and the dozens and dozens of others that have gone by the wayside over the years, or scammed people over the years, or been hacked and compromised over the years. So what this means is you can now sell your ETF for the underlying asset. So maybe you got in and you bought that BlackRock ETF or the Fidelity ETF or whichever one you're into. When you go to sell, you have the option of selling for cash, US dollars, and you have this option to sell for the underlying asset. You can redeem your ETH ETF for whatever that value is in Bitcoin, which is tremendous. It also means that you can onboard that way. So if you currently hold Bitcoin, instead of having to self-custody, which if you're a Bitcoin OG or maxi, you want to self-custody. But if you're not comfortable doing that, and a lot of people aren't, especially a lot of older investors, you can integrate that all into one convenient place, get all of your financial and tax reporting from one place. Your financial advisor has it all in one place at that point. So you could buy your ETF by taking your Bitcoin and presenting that to those companies. If it's BlackRock or Fidelity or, whomever, you can buy your ETF with your Bitcoin. So that's a big deal. News just came across the wire. The FOMC meeting just ended. That the rate is unchanged. No surprise there. Let's look real quick to see if there's any change in price action. We're already coming off of a dip here, and looking for opportunities, quite frankly. Let's see if there's any change in the order book dynamic. Just get a quick refresh on this and see if that's changed at all. No, it has not. Now, I'm watching this liquidity here, by the way, for Bitcoin to see if this changes, see if we maybe get a rug pull here, either today or after the close tomorrow. I think that will be interesting. Obviously there's options. This may have originally been set for options. I think options expiry. What's today? Today's Wednesday. So options expiry would be tomorrow, right? And we also have a monthly close. So lots of reasons to expect some shifting of liquidity in the order book tomorrow across the board. Let's see if there's any change on the ETH front here. Just while we're looking at it, let's see. Big block of bid liquidity overhead, holding things in place at the moment. I'm looking for a dip. There's been some pretty robust selling for the day, and but it's being well supported because of the institutional demand to buy the ETH. So maybe we get this dip. Maybe it develops into something more after the monthly close. So basically watching that, and we'll be watching for new trend precognition signals to see if we get a different outlook for the month of May. May. I'm going backwards, man. what are we moving into? August. So obviously I'll be looking for new signals here to see if we get any change. Right now we're on this upward trajectory, no surprise there. And ETH really doesn't have a lot of hurdles to cross before getting to price discovery, right? We have a double top at this 4,100 level. I expect resistance here. And if that's cleared, then the next stop would be the all-time high around 4,800. And from there, it's on to price discovery. So I think there's a lot on the horizon. What this means for you and your investment thesis, if you will, is how you're going to position yourself, right? If you've been if you have been waiting for institutional validation or regulatory clarity, you're seeing both of those things materialize right before your eyes in real time. And if you're still treating, digital assets as, speculative things to bet on, you might want to reevaluate where you're focusing your attention and your money. It's fine to continue to trading. Obviously, there's money to be made that way, but you might want to recalibrate or rebalance your portfolio and your strategy based on the fact that Bitcoin is well positioned to become a reserve currency, and whether it does or not, it is well positioned to be used as collateral. Okay, you will be able to, once these things come into place, you will be able to borrow against your Bitcoin. Even right now in DeFi, you can't borrow directly against your Bitcoin. You have to convert. It's going to be a wrapped Bitcoin. You're going to exchange it for something else. There's lots of lending protocols out there, but in a TradFi situation, you're going to be able to borrow against Bitcoin, and you're likely going to be able to get a home loan, a mortgage, an FHA, a federally backed mortgage, collateralized by Bitcoin. That means you don't have to sell your Bitcoin to buy a house. That means you don't have to liquidate your assets. It means you get to keep the house, you get to keep the Bitcoin, and you get to get the house. Okay. So that's absolutely huge. Absolutely huge. So, for me, I have been overweight in Bitcoin for a long, long time. I've got very little confidence in the vast majority of alts. There are a very, very select few that I deal with, and after this development and what I've seen here over the past few weeks, I am actively increasing, looking to increase my ETH position, and that means I'm going to have less trading alts, and it means that I'm going to scale back a little bit of my Bitcoin weight into ETH. So what you do is up to you. I'm just telling you that that's my approach to it at this point. And I'm looking for those dips to buy, and I'll be using a combination of things, my technical analysis and the MTF mean reversion indicator to find those opportunities, find those dips worth buying, and see if I can add to my position in a meaningful way by dollar cost averaging my way in. It is so hard to pick the absolute tops and bottoms because you never know what kind of curveballs this market is going to throw at you, and that's why I like doing it this way. I can find those dips and buy a little bit each time I hit those levels, and over time build my position in a way that is going to average my entry, mitigate risk, and help me build a longer term position for longer term wealth. Hope this has been valuable insight for you. Hope you gained some knowledge out of this. And if you did, do me a favor, drop a comment, tell me what you liked. If you didn't, do me a favor, drop a comment and tell me what I could do better to serve you more and serve you better. Okay. Because at the end of the day, I'm doing this to deliver value to you guys. and I want to do that in the most meaningful way that is most valuable to you. So I appreciate that feedback, and I appreciate the following and support. And I hope that you will continue on this journey with me as we will continue to watch what's happening through the markets and try to position ourselves best for this literal evolution, a complete foundational shift in our financial system. It's coming whether you like it or not, or whether you are ready or not. I suggest you prepare yourself. Make it a great day, guys. Here's to trading smarter.